Hello Matrix and welcome to Was a Matrix. My name is Looney and today we're focusing on your exam prep for accounting. All you need to do to send us your questions and comments is follow Was a Matrix on all social media platforms as well as our WhatsApp line. The details are on the screen. We do have a cool competition going on for you guys, so please stay tuned to get all those details later on in the show. I've got our favorite sign language interpreter, Nicolene, as well as our awesome teacher, Ashraf. Thank you so much, guys, and over to you.
Thank you, Looney. Welcome, grade 12s. Yes, you with Ashraf Patel. And you remember, don't fear when Ashraf is near. Right, guys? Okay, we're busy with exam preparation. We're making sure that you're ready for your accounting paper. What are we focusing on today? Let's look at what our focus for today is. Remember, we're going to look at possible examination questions. We're going to start off with the debtor's age analysis. We're going to go on to creditors recon, a bit of VAT, inventory valuation, and something on fixed assets. So a whole host of questions. You want to be informed? The place to be is with us on Was a Matrix. Okay, let's go. Firstly, what do we mean by a debtor's age analysis? You got to understand what you are calculating. It has absolutely nothing to do with the age of the debtor. Yes, it has to deal with the age of the debt. That means how long is the debt outstanding? Is it outstanding for 30 days, 60 days, 90 days, whatever the situation may be? Okay, now we are told that in our debtors terms that are allowed to our debtors, we are told here that all accounts are to be paid within 30 days and a 2% discount will be granted, right? So you telling debtors, listen, settle within 30 days, and if you settle within 30 days, you will receive a discount of 2%. If any account is not paid in 60 days, 5% interest will be charged, okay? So you can see we're using both the carrot and the stick method. Carrot, incentive. If you pay on time, you get a discount. Stick method, if you don't pay, you're going to be punished. We're going to charge you interest on your overdue account. Right. If any account is not paid in 90 days, the account is handed over. We'll come back to that one just now. Okay. So, when you're doing a debtor's age analysis, there are two things that you need to look for. The debtor's age analysis will talk about the terms and the credit limit. Okay? The terms that are allowed to your debtors and the credit limit that is allowed to your debtors. Important. So, debtor's age analysis, focus on terms and credit limit. Okay. So, here's our debtors. We have these debtors: Daydream, Goodfella, Hasty, Platsuck, and Skinflint. And obviously the breakdown is given to you regarding each of these debtors, right? Okay, what are the questions that we have to answer? The first question says, how does the preparation of the debtor's age analysis assist in the control of debtors? So remember, your debtor's age analysis is part of internal control. What is internal control? Internal control is to ensure that our assets are safeguarded. Clear? So, how does the preparation of the debtor's age analysis assist us? One, it shows you which debtors do not keep to their credit terms. You've given them 30 days in which to settle their accounts. Obviously, the ideal is for all of them to settle, but if they do not settle, you will pick it up by drawing up your debtor's age analysis. Watch, let me show it to you physically so you can see it. Here, Daydream has an account for 90 days, right? Platsuck is greater than 90 days. So obviously you can identify now that these are debtors that are not complying with their credit terms. You may have had a column in here as well for credit limit to see If that's their credit limit, are they complying with the terms of the credit limit as well? That can also be ascertained from your debtor's age analysis. Okay? Once you've ascertained the information, obviously you now realize that some of them are not complying with their credit terms. So what do? Action can then be taken to encourage them to pay, right? Like we said, this company has used both the incentive method and the punishment method. If you pay on time, you get a discount. If you do not pay, interest will be levied against your account. And obviously, you can keep your bad debts to a minimum, because remember, bad debts is an expense to the company, and we can ill afford for our debtors not to pay us. Because by the same token that our debtors have to pay us, we have to meet our credit responsibilities to our creditors. So therefore, to ensure that we have that cash flow, to ensure that we maintain the ability to settle our accounts, we must collect our dues from our debtors timeously. Then the question says specifically, how much is owed by the debtors on the 31st of May 2020? How much do our debtors owe us? Let's look at it. Clearly you can see there's a current amount of 9,635 plus a 30-day amount of 3,075, a 60-day amount of 3,500, a 90-day amount of 970, and the total year is 4250 for greater than 90 days. So when you're doing your calculation, there you have all the amounts that I've showed you on the previous slide, your 4250 plus the 970 plus the 35, 3075, 9635. The total amount that our debtors owes us is 21,430. Obviously, we're getting the information from our debtors' age analysis. Next question. Which debtor would you gladly give a credit reference to? Let's see. Let's look at the information. Obviously, if you're looking at this information, you can clearly see that H. Hasty only has a current amount outstanding. So she's definitely a candidate for a good credit reference. She's complying, she's up to date, and there are no challenges with her account or his account. However, you could also look at Goodfellow, and that could also be a candidate because you're allowed 30 days credit. Goodfellow is complying with the terms, and therefore that one would also get a good credit reference from our company. Why? They are complying with the credit terms. Next question. The answer obviously to that one was H. Hasty, but I told you as well, we could have also used Goodfellow to give a credit reference to. Which debtor would be handed over, and what does this mean? Remember, I alluded to this part earlier in the question. Let's look at the information. Clearly you can see our agreement was greater than 90 days. Here we go. Obviously, that's the debtor that we will hand over. What do we mean by handing over? This means that's the debtor we're referring to, P. Platzak, and that the account will be handed over to an attorney, a debt collector, somebody involved with the collection of funds, who will then contact the debtor and give him a certain time to pay the account, okay? Because obviously that debtor is not complying with the credit terms. If the debtor does not pay the account, he or she can be sued. It means if they don't comply and we've handed them over, then obviously now the attorney or the debt collector, whoever's involved with that process, would then do the necessary. Okay, so clearly you can see how a debtor's age analysis would assist us as the company to ensure that our debtors pay timeously, and obviously we keep our bad debts to a minimum. Why are the preparation of a debtor's collection schedule and a debtor's age analysis important internal control measures? Remember, I spoke about that just now, and I said the idea of internal control is to ensure that our fixed assets, or not just fixed assets, but our assets are being looked after. So the idea of internal control is to protect our assets. And yes, debtors are our assets. So now, let's look at this here. A debtor's collection schedule projects anticipated receipts from debtors. Remember, when we're drawing up a debtor's collection schedule, it's what we expect our debtors to pay us. It's projected, right? Based on the agreement that we have with our debtors. Then it ensures that debtors keep to their credit terms, and obviously if they do not act, or they do not act timelessly in settling their accounts, we now act immediately if debtors do not comply. Clear? Okay. And then your debtor's age analysis. Remember, it's an effective method of controlling overdue periods so that appropriate action can be taken, such as interest or legal action. We've discussed this at length. Just a repeat question to ensure we understand it. Identify possible bad debts and send timely notices. Absolutely critical. Communicate with your debtors so that they know their accounts are outstanding and need to be settled on time. Okay, done and dusted. Creditors recon. With the creditors recon, remember, two creditors recons. One is your internal and one is your external. What is your internal creditors recon? Where you are reconciling your creditors control account with your creditors list. You can see everything to do with your books. That's why we refer to it as internal. And then you get the external one where you are reconciling your creditors account as it appears in our books with the statement that we are receiving from our creditor. Okay, now this question says, what is the purpose of reconciling the balance on the creditor's control account with the total of the creditors list? State 2 points. Firstly, it's the internal one. Now remember, once again, a creditor, whenever you're dealing with a creditor, we talk about the triple entry principle. Yes, you heard correctly. The triple entry principle. You make a double entry in your general ledger, right? As an example, bought goods on credit. Trading stock on credit. You're going to debit your trading stock. You're going to credit your creditors control. But at the same time, you're going to credit the personal account of the creditor in the creditor's ledger. That's why we talk about the triple entry principle. A double entry in your general ledger and the single entry in your creditor's ledger. So now they're saying, why is it important to reconcile your creditor's control account with your creditor's list? But remember, your creditor's control account is a summary of your creditor's list. Your creditor's control account will not tell you what James is owing to you. But James's account will appear in the creditor's ledger as a standalone, and you'll be able to see how much James owes, or how much we owe James rather, because we're talking about a creditor, right? By the same token, you got your debtors reconciliation, debtors list with your debtors control account. So therefore, what is important for us to note is that we are reconciling our control account, which is a summary of the ledger. The reconciliation of the creditor's control account and the creditor's list is a means of internal control, right? Internal control. To ensure, one, no errors have been made. So, if there's an error, it can be identified so that we can, not only errors, but there also may be omissions, right? It's not here, but it's something that we need to take cognizance of. There could be omissions, and the omissions will also have to be taken into account. Okay? Then, Why do we do that? So that the correct amount is paid to our creditor. Because if we pay timelessly with the correct amount, we will then be entitled to a discount. So obviously, we don't want to lose the discount that could be offered by our creditors. And the only way you can ensure if that is correct, if we ensure that our creditors control account agrees with our creditors list. Okay guys, still looking at the creditors reconciliation, it tells us it will assist the business in detecting errors, omissions in their books. Remember we spoke about that? It will also show errors and omissions in the statement that we are receiving. And obviously, we will be able to detect fraud and take the necessary action. Very important, because if there's fraud going on, it will be evident when we do our reconciliation between the creditors control account and the creditors list. So, in summary, when you're looking at your creditors recons, remember, internal, control with list, external, ledger account with the statement that you are receiving. The idea is to ensure that the two figures are the same. Obviously, they may be different because of errors, omissions, whatever else that may be, but we have to do the reconciliation to ensure that the two figures are the same. Okay, guys, don't stray or go away. We'll see you just now.
Thank you, Ashraf. Matrix, let's take a quick break and we'll see you straight after this. Welcome back from the break, guys. If you've just joined us, we are still doing your exam prep to help you with the upcoming exams. If you want to win yourself something, then listen up. Wazomatrix is bringing you the hashtag WazoWinner competition, where 2 lucky matrix stand a chance to win 2 gigs of data. All you need to do to enter is head on over to our Facebook page and all of the details will be there. Thank you so much, Ashraf, and over to you.
Thank you, Looney. Welcome, accounting boffins. Right? What have we done so far? We've dealt with the debtors age analysis and we've dealt with the creditors reconciliation. We now go on to VAT. Okay, remember with VAT, the bottom line of the calculation is for you to be able to calculate whether you owe SARS money or whether they owe you money. So therefore, based on the entire section on VAT is for you to be able to calculate the VAT amount payable or sometimes receivable, depending on the transactions that are given to you. So we now have to calculate the VAT amount. Okay. Looking at the information that we have here, we are told that at the beginning we have a VAT payable amount of 43,820, remembering that SARS VAT control account can also have a credit or a debit balance. So therefore, please guys, watch the integration. If it appears as part of a balance sheet question, you must be able to place your SARS VAT control, either debit balance receivable, credit balance under your payables, right? Okay. The internal auditor has identified the following errors and omissions which must still be brought into account to calculate the correct VAT payable amount. Okay, let's look at the errors and see how are we going to correct it. Number 1. You are told that sales invoices omitted from the debtors journal inclusive of VAT amounted to 10,833 Rand. Step number 1, calculation. Remember, your VAT rate is 15%, right? And whenever you're working with inclusive, make a mental note of this. Whenever you're working with inclusive VAT, it will always be 15 as your numerator and 115 as your denominator. Let's look at this calculation. So we're going to say 10,833 Rand times 15 divided by 115, and that will give me my VAT amount, because remember, what do I want? I want my VAT amount. And in this case here, it's VAT, it's a sales invoice, it's the amount that we owe to SARS, Therefore, look at this here. Firstly, there's my balance, which I slotted in, which was given to me, right? I'm showing you the VAT control account. Obviously, it can be done as a calculation. I've shown you both, but let's understand the VAT control account. It will make your calculation much easier. So there's the 1413 that I've omitted, which I owe to SARS. Remember, I owe that amount to SARS because of the VAT that I have collected from the debtors. So with every transaction, you need to ask yourself, do I owe SARS money or does SARS owe me money? So am I debiting my VAT control or am I crediting my VAT control account? Please keep that in mind. The next one says, damaged goods returned to suppliers excluding VAT. So step number one, calculation, right? We need to calculate the VAT amount. But this says excluding VAT. So obviously, this amount that you have here of 18,600 does not include your VAT. So what do? Very simple. You just say 18,600 times your 15%, and your answer is 2,790. So therefore, look at this here. Remember, these were damaged goods. Let's just recap the transaction. Damaged goods returned to suppliers. That means we returned the goods to suppliers. Initially, we claimed the VAT from the supplier, but now we've returned these goods. So obviously, in your VAT control account, you are crediting your VAT control account. Remember, look at your double entry, right? You're going to credit your credit, you're going to debit, sorry, let's repeat that, let's get it right. You're going to debit your creditors control with the full amount, right? The full amount. You're going to credit your trading stock and you're going to credit your VAT control with the 2,790. Therefore, you can see on the credit side of your VAT control account. Okay, next transaction. VAT on sundry business expenses omitted, 6818. Remember, we are a registered VAT vendor. That means some expenses where we are allowed to claim the VAT, that's the amount that SARS owes to us. So obviously in my VAT control account, I'm going to debit my VAT control account, and here you can see there's my entry reason, because these expenses were omitted. And that's the VAT that we can claim back from SARS. SARS owes us that amount. Therefore, on the debit side of my VAT control account, the 6818. Remember, how you do the calculation is entirely your choice, right? But understand what you are doing. Understand whether are you owing SARS or does SARS owe us. Next transaction. Go back to the, there we go. They're telling you VAT on discount received from suppliers, 756. Now here, they're telling you what the VAT amount is. You don't have to go and calculate it. They're telling you that is the VAT amount. What is the VAT amount? 756 Rand. Let's look at it here. Clearly you can see, because of the discount that you received, clearly that amount is now due to SARS, because initially you claimed the full amount, but you're not settling the full amount. There's a discount involved, and as a result, you owe SARS that amount of 756 Rand. Okay? VAT on bad debts recovered, 112. Okay? They're telling you once again, it's the VAT amount, meaning you don't have to calculate it. That is the VAT amount. What was it? 112. Let's look at this transaction. You're debiting bank, right, with the amount of monies that you are receiving, whatever the amount may be. You're crediting bad debts recovered with the bad debts recovered component of it. So you crediting bad debts recovered. Why? It's an income. But you're also crediting your VAT control account because you owe SARS that money on the amount that you've recovered. That's the amount of VAT you owe them. How much you owe them? 112, and there you can see on the credit side 112, the amount that's due to SARS as a result of the bad debts that we have recovered. Okay, then we go on to I think it's the last one. VAT on bad debts was recorded on the wrong side of the VAT account, 92 Rand. Okay, now let's look at this transaction in terms of the original transaction for bad debts. What are we going to do? You're going to debit your bad debts because it's an expense with the bad debts amount. You're going to debit your VAT control, and you're going to credit your debtors control with the full amount. I repeat the transaction. You're going to debit your bad debts, it's an expense. You're going to debit VAT control because obviously that amount, you're not going to be receiving it from SARS. They actually owe you that amount. And you're going to credit your debtors control with the full amount. But it was recorded on the wrong side. So therefore, in order for us to correct it, you can see, watch, we double the amount. Because by just putting the one amount in, you're only going to cancel out the original transaction. But by doubling it, you are now doing the necessary entry in terms of the 92 Rand. Right? Finally, you balance the VAT control account. And once you have balanced the VAT control account, you can clearly see that you owe SARS an amount of 41,889. That's the amount that's payable to SARS. Remember, liability appearing under trade and other payables in my balance sheet. Watch, this calculation is the same as your control account here. Watch, you start with your 43820, you add the 1413 plus the 2790 plus the 756 plus the 112. Why are we adding them? Because they're all on the same side of the account. Can you see that? That is why we are adding them. What appears on the debit side is your 6818 and your 184, and therefore your VAT amount payable is 41,889. Okay guys, so that is the calculations that you have to do in order to calculate the amount that is either due to SARS or due from SARS. Remember, in every transaction, always start with the full amount. That will give you an indication of whether you have to debit your VAT control or credit your VAT control account. Okay, that deals with VAT. So we're done with that. We completed VAT now. Let's move on to inventory valuation. Again, with inventory valuation, what are we expected to know? What's examinable? You must know specific identification. You must know FIFO. You must know weighted average. You must also know the stock systems, namely your periodic inventory system and your perpetual inventory system. So all of that is examinable and you are expected to know that. Let's look at the question that we are dealing with. We are told, calculate the following in respect of ladies' watches on the 31st of August. What do you have to calculate? The value of closing stock, and you have to calculate your cost of sales. Right, here goes. What information do we have? The business uses the following methods to value the stock of watches. The ladies' watches is specific identification. In other words, you're looking at high value goods which are easily discernible, and therefore you can check which is which item. In that case, a good example that we always use is motor vehicles, right? Obviously, you're going to use the specific identification method. Okay, and then we have the men's watches, which we are using the weighted average. You are also told no watches were stolen or lost during the financial year. Okay. They are telling you, with regards to the ladies' watches, the cost price of the ladies' watches includes the transport and the customs duties. If we're importing the watches, they're telling you the cost price includes the carriage or any other cost that we have. In this case, they're telling you the transport and the customs duties are included. And we are also told that these watches are sold at a markup of 75% on cost. So every bit of information that is provided to you is important. Don't take for granted that we just want to fill the page. No. Look at that information because it has pertinent information which you can use or you will have to use in your calculations. Right. And if we look at our opening stock of watches, we can see that we had 12 units in stock. Remember, we're specifically identifying now. We sold 11 of those units. Clearly you can see 1 unit is left over. Why? We had 12, we sold 11, 1 unit is left over. Therefore, in my calculation, 1 at 6,500, you know where that comes from. The unit cost was 6,500. Can you see? I'm specifically identifying each item. They are telling you, with regards to the ladies' watches, the cost price of the ladies' watches includes the transport and the customs duties. If they are, obviously, if we're importing the watches, they're telling you the cost price includes the carriage or any other cost that we have. In this case, they're telling you the transport and the customs duties are included. And we are also told that these watches are sold at a markup of 75% on cost. So every bit of information that is provided to you is important. Don't take for granted that we just want to fill the page. No. Look at that information because it has pertinent information which you can use or you will have to use in your calculations. Right. And if we look at our opening stock of watches, we can see that we had 12 units in stock. Remember, we're specifically identifying now. We sold 11 of those units. Clearly you can see 1 unit is left over. Why? We had 12, we sold 11, 1 unit is left over. Therefore, in my calculation, 1 at 6,500, you know where that comes from. The unit cost was 6,500. Can you see? I'm specifically identifying each item. Okay, guys, so this means that you do not work with these figures here because that's the total, and because we are using the specific identification method, we only work with individual items. Right, so let's go to the September purchases now. We purchased 15 units in September, right, of which we have sold 10 units. Clearly you can see that we have 5 units left over and the unit price is 6,800. Therefore, when I go to my calculation, there's my 5 units at 6,800 to give me a value of 34,000. So you can see, guys, I'm specifically going to each item, identifying it and saying, okay, next one, January, let's look at it again. We purchased how many units? 12 units were purchased. Did we sell all of it? No, we sold 10 units of those, meaning 2 are left over, 2 at 7,300. Therefore, you got 2 at 7,300 to give you the 14,600. Right, and then the last one that we have to do here is my April purchases. We purchased 8, we sold 5, meaning we got 3 left over at how much? 7,800. There's the calculation. So my total stock value is 78,500. Okay. The next part of the question, we were expected to calculate the cost of sales. You start off by taking your opening stock, which was 78,000. Again, looking at your information, there's your opening stock. The total amount is 78,000. So I got the value of my opening stock. I add my purchases figure again from my table. Look at my purchases. Total value 252,000. Therefore, purchases 252,000. I calculated my cost of sales. There's my closing stock. Because remember, in calculating the cost of sales, what is it? Opening stock plus purchases plus expenses on purchases. But in this case, my expenses on purchases are part and parcel of my purchases figure. So therefore, you will see those items need not be listed. So therefore, opening stock plus purchases less your closing stock will give you your cost of sales. Another way of calculating my cost of sales, while we're at it, you take your sales figure, which was given to you. Watch, your sales figure was given to you. Here's it, 440,125. What do we do with it? You take your 440,125 times Markup was 75% times 100, divide by 175, and voila, same answer. So there's two ways in which you could have calculated the cost of sales. Okay, grade 12s, that was the specific identification method. Now remember, you also need to know how to work out the weighted average method. Make sure you practice that. Guys, time for a break. Looney, over to you.
Thank you, Ashraf. Matrix, let's take a quick break and we'll see you shortly after this. Welcome back from the break, Matrix. I hope you guys are still enjoying the show. We are in the final stretch, so Ashraf, over to you.
Okay, grade 12s, welcome back. Yes, we've done with some sections already. We've completed the debtors age analysis. We've finished our creditors recon. We've done our VAT section. We've done our inventory valuation. And the last one, fixed assets. Let's look at what the question wants us to do. The question says, show the asset disposal account, obviously, and complete the fixed assets note. Now, with fixed assets and asset disposal, they go hand in glove. You must know this section. Okay, looking at the information that we have, we are told all the equipment which had been bought on the 31st of August 2016 was traded in on the 29th of February 2020, right? So all the old equipment, that means, was traded in. And we traded it in for 600,000. They're telling you new equipment was purchased on this date. Equipment is depreciated at 15% per annum on cost. That's your method of depreciation. Remember, depreciation, cost price method, accumulated depreciation on the carrying value. You must know both the methods for the exams, right? They're telling you no new land and buildings were bought during this year. All of this information is very, very important. Right, now, what do we know? We are given an extract from our balance sheet telling us that our equipment at the beginning of the year was 1,200,000 and at the end of the year was 1,500,000. Once again, guys, just a reminder, the arrow is very, very important for you to determine the beginning of the year and the end of the year. Okay, now, if you look at your equipment, they're telling you, the information given to us was that all the equipment was sold. Therefore, when you're dealing with your asset disposal, keep this in mind, that the cost price of the equipment that we are disposing of was 1,200,000, right? Now, the double entry for that one obviously is a debit to asset disposal and a credit to equipment. Therefore, this entry here. What are you doing? You're transferring the cost price out of the equipment account into the asset disposal account. Remembering at all times that your asset disposal is an interim nominal account. It serves one purpose only, and that is to ascertain either a profit or a loss on sale of asset. Okay. When you are dealing with asset disposal, also remember to draw up your table where you indicate your depreciation, right? For example, you indicate your depreciation, your cost price, your accumulated depreciation, your carrying value, your selling price, your profit or your loss. Now that will give you an indication also of what note 3 has to have in terms of the asset disposal. Okay. So I've got my cost price, done and dusted. Next one, I'm told that my depreciation is calculated at 15% per annum on cost, right? So here I do a calculation to work out my accumulated depreciation. Firstly, looking at the information that I have here, can you see? I have 540,000, which was my accumulated depreciation on the equipment to date. What type of an account is accumulated depreciation? Accumulated depreciation is a negative asset. What do we mean by that? It reduces the value of your asset. Got it? Okay, so it's accumulated at the beginning of the year was 540,000. Obviously, what do we do now? We now calculate our depreciation for the current year, right? How do we do that? It's your 1,200,000. That's your A, times your rate, which is 15 over 100, times your time, and you will notice that this asset was disposed of. When was it disposed of? When did we trade it in? On the 29th of February. So if you count September, October, November, December, January, February is 6 months. Therefore, in your calculation, you've got 6 over 12, right? And let's do this calculation. And here we go. What did we say? 1,200,000. 1,200,000, right? Times your 15%. Times 6 divided by 12, and that will give you times 6 divided by 12, and that will give you a figure of 90,000 Rand, right? So what's the 90,000 Rand? Your 90,000 Rand is your current year's depreciation that must be added to your accumulated depreciation, and therefore, note now, watch what we're going to do now. You're going to see that there's your 630,000. And what's it made up of? Your accumulated depreciation at the beginning of the year, the 540,000, plus the 90,000 to give me 630,000. Okay? Double entry once again. You're going to debit accumulated depreciation and credit your asset disposal. Remember, that's the entry for the accumulated depreciation. Clear? Right. How was this vehicle or equipment sold? We traded it in, meaning your contra is creditors control because the equipment was traded in on new equipment. Therefore, you're going to debit your creditors control and credit your asset disposal. There's my contra entry. The selling price was 600,000, and if you do now check your debits against your credits, you find that we've made a profit on sale of asset of 30,000 Rand. Understand what we said earlier? The purpose of your asset disposal account is to determine either a profit or a loss on sale of asset. At all times, when you are working with an asset disposal question, ensure that you draw up this table, put in all the components, and this will make your task much easier when you're dealing with an asset disposal question. Right, in terms of note number 3, what do we now know? Clearly you were told that no land and buildings were bought. However, look at your land and buildings. Your cost is 4,050,250, right? That was your beginning of the year. But your end of the year is 2,587,750. So clearly, your land and buildings decreased, right? Obviously, this means that we disposed of land and buildings. As you can clearly see here, we dispose of land and buildings to the value of 1,462,500. Clear, guys? That's your land and buildings. Let's go to equipment. What do we know? The cost at the beginning was 1,200,000. We've dealt with that. Plus the 540. The 540 that I'm referring to here is your accumulated depreciation at the beginning of the year. So if you subtract 1,200,000 minus 540,000 will give you that figure for the beginning of the year. Right. Now what happened during the year? You know, you were told that new equipment was purchased during the year, right? What amount was purchased? Let's go to our additions. We purchased equipment to the value of 1,500,000. Got it? Okay. Now, this means, therefore, that the old equipment is sold, it's gone. You've replaced it with new equipment to the value of 1,500,000. Now, let's look at this here. If you took your cost price and your accumulated depreciation to determine your carrying value. Remember, your cost price was 1,200,000. Okay? Your accumulated depreciation was a 630,000. 30,000. You remember that calculation? The 540 plus the 90. Okay? And if we do the maths here, we take 1,200,123 minus 630. 1,200,000 minus 630, 123 will give me a carrying value of 570,000. Let's go back to that slide. Here's our slide that we're looking at. Here's the one, right? So clearly you can see there's your disposal, the 570,000. That's the carrying value. Now, people, important grade 12s, in your note number 3, your disposal will be at carrying value. And carrying value, how do we get it? Cost price minus the accumulated depreciation will give me my carrying value. So here we go. There's my carrying value of 570,000. Okay. Let's look at the depreciation now. We've already calculated the depreciation of the sold equipment. Remember, that was the 90,000 Rand. Let's calculate the depreciation on the new equipment. What was the new equipment? The new equipment was 1,500,000. So here we go, 1,500,000 times 15%. Remember, art, amount, rate, and time. Your rate is 15 over 100 times 6 over 12. Let's do that calculation. So we've got 1,500,000, 123, right? That's the amount. My rate times 15%. Okay? And then my time component times 6 divided by 12. And that will give me a figure of 112,500. Okay, so 112,500. Let's check this figure out here. The 112,500. Remember this depreciation, I'm going to show you the two components, the 112,500. So let's put it in here. It was the 90,000 plus 112,500. Okay. So we got the 112,500 plus the 90,000 is equal to 202,500. There you go. Can you see? The total depreciation now is your 202,500. And in this calculation for depreciation, you got to put both components. In fact, if you have 3 components, you may have a situation where old, sold, and new. Right? But in this case, there's only 2. It was the sold and the new. Right. So guys, important. In asset disposal, draw up your table. Make sure you can see the link between your asset disposal account and your note number 3. Well, guys, that's it for today's show. Like Ashraf always says, aim for the moon. Perchance, if you miss, you'll be a shining star. Ashraf's shining star. Luni?
It's so cute. Matrix, we're wishing you everything of the best. I hope you guys do use our study resources to help you prepare. Congratulations to all of our competition winners who will be announced on Facebook after the show. Please visit our website, www.wazamatrix.co.za, for the study material as well as our schedule. Don't forget, guys, if you miss any of the shows, they are available on YouTube as well. From me, Luni, Nicolene, and Ashraf, thank you and goodbye.
2020. Congratulations for being so brave, so committed, and for staying the course during one of the most difficult years in our history. We're here to support you all the way. Our Waza Matric campaign was set up to support you up until the 8th of December 2020. We are offering you interactive exam guides, shows on SABC3, DSTV Catch Up, and OVHD Channel 122 that are not to be missed. I wish you all the best in your final exams. You are the hope and the future of our country, and we're so proud of you for coming this far. No matter the outcome, you are at the finish line. Now give it your very, very best. And I thank you.